All right, the world could be blowing up. North Korea is shooting off missiles. Fears the government could shut down the United States. But just a hint, the prospect that tax cuts could be happening, well, that's enough to keep this whole thing soaring. Right now, we're on the verge of yet another 1,000-point milestone. It would be the 6th since Election Day. Market watcher Scott Martin, Jonas Max Ferris. Scott, what do you think is driving it?
So far, Neil, it seems like uncertainty, really, if you ask me. The last couple of days in the market have been kind of weird, to be honest. Volatility's been up. Your favorite index, depending on which it is, has been either up big or down big. So there's been a lot of questions. And I think the reality is this, Neil. We're going to get something. But the fact that this is so watered down, and I think, unfortunately, so depressing from how it was pitched to us back, say, in February and even March when Stephen Mnuchin talked to you about it back in the day was, you know, seeing what we're going to get out of this tax plan, which looks like it's going to favor some of the big companies that have a lot of money overseas, yes, but maybe not so much the middle class, maybe not so much the pass-through entities, the high-income earners. That is a disappointment to me and something that the market is starting to take notice of. You
know what worried me, Jonas, whether you're a fan or supply side of this, a Keynesian or whatever, but this alternative, measure to raise taxes in the event the revenues don't come in, so that if we have a recession, that would be good enough, the slowdown that would come with that, to raise tax in the middle of a recession. That's when I start saying, all right, now it's getting into crazy territory. What do you think of this?
That is sort of the danger, because if you have like a time bomb, that well, we're going to get growth for doing a tax cut, but if we don't get growth, don't worry, we're going to have taxes that automatically go up and solve the problem. The problem is like, what if we're in a recession there? Then you have it's so twisted then, because now we're lowering taxes during what looks like a awakening economy. We're seeing GDP coming up even higher than they thought. And then we're going to get a tax increase later, maybe in a recession that we have no control over. It's exactly the opposite of what you'd want to do. It's certainly opposite of Keynesian, to your point you just brought up. So trying to fix this with timetables in the future is not really a solution, even though I am also concerned about debt levels over the time. But you can't just magically pick a year that you think you can raise taxes to fix the growth that didn't happen from the tax cuts this year. I kind of want to disagree with Scott a little bit. I think this tax cut is really big, even though, you know, Trump will say it's the biggest ever. In net tax cut, it's not the huge, it's so big. But the actual action going on is so much more massive than anything we've seen in so long, where there's like, so, you know, they're just radically changing the tax code around, where there's a huge break to corporations, which is great, and a lot of them are dodging taxes anyway. But then there's also, like, the whole housing market's going to be treated totally differently. They're taking away so many deductions. Like, I think the actual raw changes are so much bigger than even people think about. When you really look at it, you're like, wow, they're doing that too. Like, because they offset it with revenues somewhere else, it doesn't seem like a big, simple tax cut like the Bush tax cut, but it's really much bigger than anything we've done in a long time.
You know, Scott, one of the things I always think about is companies are free to do with their money whatever they want to do. Their first and foremost obligation, fiduciary-wise, is to their shareholders. So if they buy back stock, if they increase their dividend, if they buy out a competitor, that's their won't. But the people who push this big tax cut for them, these Republican senators who are likely to go for this, have put their heinies on the line saying, you know, you're going to hire more folks, right? You're going to expand your plant, equipment, and all that, and really give the economy a good goose. Not that helping the markets wouldn't do that, but can you imagine if they don't? And if they don't, at least even right away, couldn't there still be hell to pay for Republicans at the polls a year from now?
Yeah, we've seen it time after time, Neil. You can lead companies to cash, but you can't make them spend. And I agree, that's going to be a benefit for capital markets if the money comes back overseas, from overseas, whether it's, you know, $2, $3, $4 trillion, as Trump has said, and it gets spent in dividend increases, buybacks, and so forth. But you're right, if it doesn't lead to more capital spending via the depreciation benefits that are proposed, or if it doesn't lead to more hiring, then this kind of falls flat. And to Jonas's point, despite wanting his hairdo for myself, is that, you know, this is a big deal, though, to me.
Right about
he looks great. I love his haircut, too. Yeah, and his hair is blowing in the wind.
He's like the Fabian of finance.
But here's the thing, Neil, though, just to Jonas's point quickly, is that this is totally kind of fallen off the table with respect to the help it was going to give some of those high-income earners and even some of the middle-class people, depending on how you assess the deductions versus the standard deduction versus the itemization. So the reality is this. I think it's totally falling flat on the individual side. The corporate side could be okay, but this was proposed as helping out everybody, and it looks like a corporate benefit only.
You know, Jonas, to that point, besides the great hair comments, which I totally agree with, Do you think that impressions are everything? I think this impression that this is so overtly, skewed to the rich, I just don't think that flies, but I'm not going to get into that. I will get, if that's the impression, if that's the one that's being foisted on people, without getting under the hood and looking at this thing, that's what the president is trying to address today in Missouri. That presumably is what Republicans will try to be addressing when they go back to their constituents. How's that going?
Okay, first of all, it's very difficult to cut taxes and not have it skew towards the rich because of the way taxes are paid now after lots of tax cuts. And remember, Obama never raised the taxes back to where they were under Clinton for the middle class and below. So, it's hard to cut their taxes a lot more. Very little taxes being paid at this point on a federal level. I don't want to talk about all the states. The bottom line is you can't have the highest corporate tax rate in the world. Does that mean they're going to all hire people? No. There's a lot of, look, it's already deductible to hire somebody as a corporation. If you had a way to make money, you're going to hire someone to do it, whether the taxes are 40% or 20%. That said,
but there is a delay with that. There is
a
significant delay. Ronald Reagan found out up to 18 months delay.
Again, I'm for lower corporate taxes. I think way in the future, they're all going to be zero because companies are going to keep moving to the countries that do that. So we don't really have a choice in the matter. As far as the rich individual issue, and again, this is more of a corporate tax issue in that, I see this as a tax increase in a lot of individuals. This is not as much of a break as George Bush did, where
not
we
at all.
bracket,
not even
brackets.
close.
Not at all, because you're talking, first of all, a lot of the high-income people, 100, 2, 3, $500,000, $1 million, are in the states where they're losing a huge deduction here. This is not a handout to somebody making $800,000 in New York City at all. That was with George Bush. This is, again, the corporate level, and not certain corporations that are already paying low rates are definitely getting a tax benefit to be more competitive with other areas. This is really not that. The estate tax area, that's a little debatable as kind of a handout, but I don't see the income tax code changing in a way that is radical to high-income people other than the pass-through entities, and even that's a little unclear because a lot of those guys are like lawyers
and we're mixing, to be fair, we're mixing financial metaphors here and lumping them in with the very rich as individuals and not companies. It gets to be messy, but it's just not accurate. But I don't want to necessarily bore people here just to say that argument is, to your point, guys, it's not quite right. If anything, this thing is sort of like a blah on the individual front. But on the corporate front, it's a big deal. Guys, I want to thank you both very, very much.